300 basic here. Nothing to hide. Nothing to hide. Alright, well. Hold on 1 second. Alright. Sorry about that. Where are we? Well, I'm up 2,500 today, but not like that really matters because I've been getting shelled lately. But floating around 20,000. Alright. Not bad. I should be happy about that, honestly. Considering I've been short for the last, I don't know, this entire week. Today is Friday, and we've basically gone up the entire time. So yeah, so I should be happy with that. Not bad. And get wiped out. So it's, I don't know. It is a mystery what's going on right now. I mean, we've got the banking crisis, obviously. Bunch of banks had runs, you know, a few of them shut down. And my opinion is, it just doesn't seem to know, we don't know what's really occurring here right now. People are saying it's, you know, it's just an old-fashioned bank run and this is like a crisis of confidence. There's also the duration mix match, you know, the interest rates that the banks gave out, you know, doesn't match the interest rates that they're taking in, so they're not profitable anymore. I think all of these things are true. Yeah, all of these things are true. But there might be more to it, or the extent of how bad the duration mix match is and the ramifications of that, we might not be able to see that clearly yet. So it sure feels like we know there's a problem, and maybe we know what it is, maybe we don't. We sort of have an idea, but we definitely do not know the extent of it. And what's been occurring is hinting that it's pretty bad, whatever it is. Whatever's floating around out there, whatever the issue is, it's really problematic. I think the Fed might have an idea of how bad it is, but of course they're not going to say. You know, Yellen and Powell, they have to keep the confidence, you know. Confidence is important in moments like this. It's always the same song and dance whenever the market starts. Whenever something breaks or the market starts to crash, you know, government officials always do the same thing. They come out and say, everything's fine, there's no problem here, you know. Nothing to see here, folks, nothing to see here. Yeah, right. They say it every time. So, but anybody who follows markets, anybody who's involved in markets can, I think, has a sense right now that there is something sort of deeply broken here. We just don't know how deep or how bad, and more importantly, we don't know if the measures the Fed has taken so far are enough to sort of contain it. And when I say contain it, I don't mean stop it all the way. I mean just kick the can down the road. I mean, has what the Fed done, is it going to put off what seems to be coming for weeks or maybe even months, you know? Because they can do that. I mean, if they come at the problem hard enough and they stop caring about their fight on inflation and they throw enough money at it, they will stop whatever is occurring here. But in order to stop it, they'd have to come at it super hard. And they're not going to do that. But they may come at it hard enough to at least put it off for weeks, if not months. We just don't know. We don't know the extent of it. We don't really even know exactly what it is. So we don't know if what the Fed has done is going to stem the bleeding or push it away or make it happen, in 2 weeks instead of right now, or in 6 months instead of right now. We don't know. Nobody knows. So what we do know is there's a problem, and we also know the Fed is throwing money at it. Let's be clear. The Fed has backed up depositors, insured deposits. Their discount window is open, which is an emergency lending facility, which has been used overnight. Apparently in the last week, the Fed has loaned out $300 billion. So that's $300 billion that's gone into the economy in the last week. So again, we have this money coming in. Yeah, how do you pick a side? You don't know exactly what the problem is. You don't know how bad it is. What you do know is that the Fed has pumped $300 billion in and says that, their window is open for anybody who needs it. So is that enough? Is that enough to stop this? Is that enough to, kick it down the road? I don't know. So that's where we're at. So with that said, I have a bunch of IWM Russell 2000 ETF and KRE, the regional bank ETF. I have a bunch of puts in both of them. Almost all of them expiring on March 31st, 2 weeks from today. Yeah. I'm sort of hoping that's enough time for whatever this is to play out. I don't think you can be long here. You can't. I mean, the problem with getting long here is that there could be a news event at any moment, a bank failure or whatever at any moment. Plus, since all of this banking stuff happened, since the whole crisis emerged, we're not down at all. We may even be up a little. So things are pretty pricey here to begin with. But again, with that said, the Fed has pumped $300 billion into the market, and rate hikes are less likely than they were a week ago. So, there are people out there, and arguments are being made that this is actually bullish. I mean, I think that's a stretch. I think it's a stretch to call what's been happening bullish. And, considering the price levels we're at, how we really haven't gone down almost at all. I mean, how do we not go down here? So I think we're overpriced to begin with. I think we've got a really significant problem lurking under the hood, which we don't know the extent of. And I think that really makes a strong case for being short here, particularly in the regional banks, which is where the problem seems to lie, and the Russell 2000, which is smaller companies that rely on those regional banks. That seems to be where the problem is located. Yeah, so that's what I'm doing. Do I feel strongly about it? I feel like I'm correct. Yeah, I feel like I'm correct. But it comes with the caveat that trying to time this is really, really difficult with the Fed throwing money at the problem. There could be, at any, you just don't know. You just don't know the extent of it. And you don't know how effective the Fed measures are. I mean, there is a possibility that what the Fed is doing, slowing down on the rate hikes and throwing money at the problem, allowing anybody to borrow against them right now, might actually be bullish for the market. Maybe SPY goes to 400 or 410 because of the Fed's actions. So, it comes with a grain of salt. At the same time, crises like this are really big opportunities to make a lot of money, and they don't happen that often. So I don't think you want to be on the sidelines. You don't want to be on the sidelines. You want to have some piece of this market in case it collapses. It's just a matter of, is it going to happen now? Is it going to happen in 2 weeks? Or is it going to happen in 6 months? So, yeah, play accordingly. You know, I would not bet on this market to crash today or tomorrow. But I would want to have positions that would take advantage of that if it did. Alright, that's where we're at. Yeah, we'll see how today goes. Up 3,500 right now. Although the pattern has been I open up a good amount, and then as the day goes on, I somehow end up in the red for the day. That's been happening a lot lately. So, we'll see. Alright, time for pizza here. Nothing to hide. Nothing to hide.